I've got my whole community on red alert. Mario, you might remember, just dealing with this question, Ref Silver specifically, that we had a moment where I said there could be one more rejection at the 50 range. We talked about once, twice, three times a lady. I use these metaphors so that people remember you say something. It's easier to remember that. It was a line out of a Lionel Richie song. Not that I was a fan, but anyway. We went up to 54 and we pulled back down to 47. And I don't think you have much of a big dip, but I was expecting some form of a technical rejection. At the time, it was moving very strongly and you thought it would continue, and that was our only point of difference. Now we've had that rejection that went with the gold, which is why we also met our platinum target. So we're actually looking to exploit the failure of the fiat debt system by trading as well as investing. And you need to be careful when you trade. And it's not necessarily for everyone, but we have real method with regards to doing that. And it's our overall opinion. And it's something I don't stop like a flea in the ear of my community saying, you are not missing the silver move. You are not missing the silver move. We've had now the rejection. And if I can just go again to the charts, and I think the supply story, because the question is actually a fundamental one, not a technical one.
I just wanted to ask you quickly because someone gave a super chat and he wants thoughts on platinum as well. So maybe you could look at platinum.
So I'll do both in one go and then I'll hand back and then you go to Clive, please. But this wick could literally be that it doesn't need to be a big rejection because of the fundamentals of the supply being so rattled. It's not something you paper over. That's another point, just by the way, on supply. So much of silver production is incidental secondary product. You don't have pure mines that you can just say, hey, can you open up that other shaft that you've already dug and all of that and just start pumping it out now that prices are better? No, you don't. You're relying on gold, zinc, copper miners who actually stumble on silver where there's a reasonable percentage of it. And because they've already expended all the energy in digging the ground for the primary copper, gold, or zinc, you get a disproportionately low cost attachment to the secondary silver that is attached. And it's part of their revenue as a copper miner. And if you're not stumbling into secondary product, it's not going to happen. And it's very difficult to forecast that. If you're digging a hole in the ground because of copper content, for which anything else you find is secondary. So that's a supply matter also to add on to the deficit in the LBMA. But this third run here, we've had on the smaller timeframes, we've had that rejection from 54 down to 47. And when we look at this on a smaller time frame, it's our take. You're going to the 90s. You'll probably have a pause just below the 3 digits and then 330. And we've done that draw before. And the key reason I bring this chart that many people have seen before is that I actually think this is that third rejection and the lady is coming very shortly. So I've dropped from the big macro view time frame just to bring it to the here and now. And I'll highlight that Fridays are often Mr. Slammy days. And the day traded quite hard to the downside and then subsequently wasn't being held all the way to the downside and retreated most of the way back up. We'll have a Sunday open, of course, coming not too far off from now. And I would suggest you're not very far away from this structure. And that's what my community guys are having me be a real bee in their bonnet about, because the breaking of this continuation structure is your lady that I was talking about when you said we're through and we're off to the races. I said we're going to get a little nudge back one more time. That's the technical aspect. And now I'm where you were last time when we were at 54. You don't want to miss this. So that's the silver. Very quickly, platinum, because I've been greedy. Let me just also say here, platinum, we made a very key level on platinum, which is another reason why we insist.
Just want to thank Oro Lobo for the super chat. He's the guy who asked about platinum. And he also asked about Trump's $2,000 stimulus. We'll come to that in a minute, but let's look at platinum. And I've seen the other super chats. We're coming for that too. So platinum, I don't follow platinum too closely. I think Clive does though.
I do, and I love it. and I think it's cheap gold. And it's even more tightly supplied than silver, in my opinion. And this was the big move. We were in sub 1,000 down here. And this is the big move. And you ran a target. And that's why I think the whole precious metals category ran a target, because they're all correlated. And when you get a technical setup on the one, this was a big weekly upside HVF method setup. That's your target 1621. You get that pullback and rest. We've now had that. If we get silver starting to run and gold is the king, we do need gold to run if silver's to run, but it doesn't need to run much. It just has to not be falling badly for the others to be unleashed. So I think this is as far back as we pull, and I think we'll start to see a bid coming back into platinum in the not too distant future. So don't miss the silver move. Don't miss the platinum move. We just need gold to be okay. And gold finished the day pretty well on yesterday. So yeah, let me finish there.
Okay, Clive, what have you got any thoughts on platinum, and also
Sure.
this talk about this $2,000 stimulus from the Trump administration?
First of all, on platinum, there's been quite a shortage of platinum in the marketplace this year. I think it's about 16%, which is one of the reasons why the platinum price has gone up by 60 odd percent this year. That, according to the estimates I've seen, that deficit should come more into balance next year. But the long-term prospects for platinum are once again one of deficit, which, and of course, the platinum market is absolutely tiny compared with the gold or silver market. And as Francis pointed out, platinum is more of a byproduct of other mining. So there's not a lot you can do to increase the platinum amount. You can't just go and open up a platinum mine. I mean, apart from that, it's impossible to find. But even if you did, it wouldn't be economic unless you're mining something else. And most of the platinum in the world comes from Russia and mostly from South Africa. But Russia and South Africa are the two key places. So potentially some instability from those places in terms of the supply. And if we get into a situation where the supply doesn't get out because of civil strife or something. So if you want to get involved in precious metals, it's not a bad thing to have some exposure to platinum as a sideline to gold, because if it decides to move, it's going to move a lot faster and further than silver or gold. Having said that, I think it's had its run for the time being, so I'm kind of expecting a year or so of stability. But I do think long term, the prospects are for the platinum price to exceed the gold price, just as was the case for, well, since the beginning of time and up until a decade or two ago. So yes, by all means hold platinum, but it's not kind of, you know, gold is the ultimate safe asset. Platinum is more of an asset you want to buy and change it to gold at some point when the price has gone up.
Yeah, I agree. I mean, gold is a monetary metal, platinum not as much, but I agree with France's view as well, and your view that there's not that much out there. And geopolitically, even though I think on Friday it looked like there's going to be a deal between Ukraine and Russia, brokered by President Trump, it looks like the Europeans are trying to scupper that. So things are still uncertain. As for the $2,000 check that Trump is talking about, they want to bring that in the next few months. And I think this shows that the economy is not doing great, as Trump says. Because why would people need a stimulus check if the economy was doing so great? And it just goes to show that he's losing a lot of support from the bottom 50%, the people who are struggling with actually inflation, because he called it an affordability crisis. But that's just another politician trying to hide the fact that all they do is really create inflation.
And the cure is going to be even more inflation.
That's right.
Because the cost of the issuance and all of that just gets passed on to the further prices. And the worrying trend, I want to just bolt something up, and that's, again, just wading in here. It all is a means to an end. What they're doing is training for UBI. So if you keep doing this and keep ingesting further, you eventually entrench it as a need for government in the basis that government continues to be the issuance of largesse to people who are struggling. It then starts to be mean qualified, and you end up UBI based on income and various other aspects. And then you get the compliance, the digitization, the biometrics, and everything else with it. So these are steps. This should not be applauded. This is part of the very subtle movement into the totalitarianism. So I described how proliferation and over expenditure by governments actually is Marxism. It ends up in Marxism, as perverse as that sounds, because it leads to inflation, it then leads to runaway, then hyper indebtedness, and then you end up with this. At the same time, this issuance and this normalization, because we had it first introduced during CV19, and now we are going, oh, so this is now policy now. Government gives checks to population. Well, of course, you and I and all of us at this level economically know it's being put into the inflation and it'll be taken straight back in higher costs across the board. But it's more worrying for how it entrenches role of state. And that's what you need to think about with the new technologies.
Yeah, Clive, what do you think about these stimulus checks?
I guess they're not going to go to everybody. They're going to be income limited. So if you have a salary of, I don't know what it'll be, 100,000, 200,000, they'll say no stimulus check. But obviously it does what it's supposed to do. It stimulates the economy. It gets people out and spending the money. Many of them won't spend the money. They'll invest the money. And because just because you earn below whatever the limit will be doesn't mean to say that you actually need the money. So plenty of these people will have the money and they'll say, right, that's it. I'm going to go and put it in the stock market, or I'm going to buy gold, or I'm going to buy silver, or I'm going to buy Bitcoin, or I'll do my home extension. So not all of it will necessarily stimulate the economy, but it will have the effect for sure of pushing up asset prices. That's definite. And this is how they keep the economy alive, by provided house prices are going up, provided stock market's going up, everybody's a happy bunny because everybody feels richer and they keep spending.
I think, yeah, and I agree with Francis 100%. Is their way of getting you to become more and more dependent on
Yeah.
government. And that's a bad thing. I was reading today some quotes here from Nietzsche, who I don't know much about, but he said something. Freedom is the will to be responsible for ourselves. So there you go. The
We can
more,
for we can force you to be free.
yeah, but the more you become dependent on government, the less free you are.